I invest for dividends and cash flow. While I sleep at night, dividend checks come my way.
PPCIAN has largely become one of the most influential YouTubers in the dividend stock investing community as he documents his own financial independence retire early journey, amassing a whopping 68,000 subscribers. I thought it would be fun today to do a deep dive analysis of his dividend stock portfolio, taking a look at his worst performing stocks, his best performing stocks, and then of course offering you my humble opinion on what I think. If this is something that you enjoy, consider slapping a like to let me know, and I may continue to review other YouTubers' dividend stock portfolios. But in light of all of this, let's right into this. Welcome back, passive income investors alike. Now, fortunately, PPCIAN actually publicly displays his portfolio that we are taking a look at on this Excel spreadsheet. And being a 100% dividend-focused investor, I think his years of experience can really offer us some humbling insights. So just taking a look, first of all, looking at the current asset allocation, I think this really sheds a lot of light on what the best dividend stocks are. And taking a look at his largest asset allocated sectors, obviously are related to the consumer staple products and consumer food products. When we go into this portfolio, you're going to see why that makes sense from a dividend investing standpoint, with some of the other largest sectors obviously being healthcare, sin stocks, and utilities. And I've always said when you're looking for a long-term view of sustainable income, you're generally going to get that from staple products like healthcare sectors, like utilities, things that will always be needed in society no matter what the economic situation is. So just scrolling up to start taking a look at his individual investments, which I believe he holds around 45, give or take a few stocks. What I want you to pinpoint your focus on is what he calls his ride or die list, which I think he thinks are the most stable investments leading into his dividend retirement, in which his current portfolio yield is about 3.82%. And starting from the very bottom is we're just going to scan through these relatively quick so we can get into the best and worst performers. Kicking this off with industrials, he's got Carrier Global Corporation, CARR. He's got Otis World Corporation. In the defensive side of things, he's got Raytheon Technology. And then in the financials, we got Wells Fargo, which is one we're going to touch base on. But moving up into one of the more staple part of his portfolio is, of course, talking about the utility sector. And the first one on his ride or die list being Duke Energy, I find a little bit interesting because I personally hold Southern Company. I just think in the utility space, if you're a new investor, you want to be moving your focus toward the companies that are moving into the natural energy space. And my personal holding in something like a Northland Power. But continuing on, taking a look at his technology sector here, he's got Apple and IBM, which I also come as a bit of a shock to me because obviously not being a growth investor whatsoever, I'm really shocked that Apple didn't come up on his ride or die list. But I think that's just because of the underwhelming yield that it offers even to a new investor. I mean, right now Apple's only yielding something like a 0.5%, which isn't something you could ever come close to retiring off of unless you have millions of dollars. That kind of seems to be the reasoning, in my opinion, why it's on his ride or die, and why he probably also doesn't own things like Microsoft. Continuing on into the next staple part of his portfolio, which also comes as a shock that none of these are part of his ride or die list. We're taking a look at MO, BTI, PM, and UVV being in the sin stock tobacco sector, which right now is relatively suppressed. And these are some of the stocks that I personally own because they are some of the highest yielding dividend stocks out on the market currently, and they are trading at some pretty major discounts as society has kind of put them in a garbage basket. But to me, this might be one of the better sectors, especially if you're new to the investing community, to maybe start paying a little bit more attention to. Now, getting into retail, which is really interesting, we got the Home Depot and of course Walmart being super incredible investments. But oddly enough, Walmart not being in his ride or die list, but Home Depot made that list somehow. So I'm curious to what his thinking is behind that, because Walmart has been one of the best performing stocks during this pandemic. Now, on his favorite list of stocks, we got Starbucks and McDonald's. And if you've watched PPCIAN at all, you'll know he religiously talks about getting his Starbucks and investing in Starbucks like every week. And of course, that would be on his ride or die list as well with McDonald's. And then also, interestingly enough, he does have O Realty Income in here, being a real estate investment trust, one of the ones that I highly recommend for US investors. And continuing on here, he does got exposure to some other real staple companies that, I mean, have found interest from, people like Bill Gates and Warren Buffett, though I don't think they hold this one specifically. We're taking a look at the Norfolk Southern Corporation, which is in the railroad sector, which we're also going to touch base on when we look at his best and worst performing stocks. But continuing up, we got a bunch more industrials, but where again we get into the staples of his portfolio and stocks that I would 100% agree with. You got Johnson & Johnson and Pfizer, and I kind of skipped over, but one of the best industrials loved amongst the community is obviously 3M because they make the N95 masks. But the best stock I think in this entire list that I would put at the top of any dividend investor's portfolio would have to be in the healthcare sector with J&J, because I'm sure we can all agree that healthcare is just a staple to society, and especially in these economic circumstances, you think that J&J would be like a high-flying stock. Even though it is trading at fair value, it has just been a subpar performer on capital growth this year, and I just think, in my opinion, I see it as something that is slightly undervalued, which is why I hold a lot of it. And then he's got AbbVie in here as well, but that did not make his ride or die list. Now, continuing on, I'm really shocked to see that he holds a Canadian bank, being BMO, and I'm curious to what his thoughts are behind that, because BMO has a larger exposure to the oil sector, which is getting fairly hard hit, but nonetheless still an incredible stock on the Canadian side of the border. Now, taking a look as we go forward, one of the stocks we're going to touch base on that I find really interesting is his shares in FUN, which I actually understand fairly well because they hold Canada's Wonderland, which is a place I have gone to many of times, which isn't too far from where I live, but we will come back to that shortly. Now getting into part of the portfolio which I always have the most problems with because I do not personally enjoy this sector whatsoever, but we're talking about the energy sector with BP, CVX, Royal Dutch Shell as well. And continuing to scroll up into another staple of his portfolio, we're looking at the CPG food sector. These would be like the consumer staples when we're talking about companies like Coca-Cola, Pepsi, General Mills. These are stocks that I've been highly focused on, kind of where I want to see my portfolio moving to in the future, in the near future nonetheless. As many of you know, I have been adding Pepsi fairly aggressively this year. I have been taking a look at General Mills and a couple other ones, though I have never found Coca-Cola to be that attractive. The capital growth has been relatively null for the last little while, whereas I believe Pepsi has a better supply chain setup. But continuing on, obviously we can get into the CPG side, which I also love because these are like your consumer products when you're talking about things like Colgate, Kimberly-Clark, the Clorox company, which is why we can see the majority of these actually make his ride or die list, because you're always going to need toilet paper, you're always going to need toothpaste and razors, and these are the companies that provide that, with no real disrupting companies coming around the corner, because I don't see razors changing anytime soon. I don't see toilet paper getting disrupted. So those are also stocks that I would love to add. It's just unfortunate that they trade at such a high premium, because like if you're buying into them today, yeah, the dividend yield is not that great, but you are getting some of the most sound investments for dividend incomes. So these are all his general holdings, with the last two being Hasbro and an air product and chemical company being APD. Let's get into what his best performers are and what his worst performers are as of late, which I actually pulled up to offer you guys some opinions with. And I wanted to start off by talking about Cedar Fair here real quickly. Now, this was one that he wanted to buy into to immediately get a higher source of dividend income. Now, none of us could have predicted the pandemic that has taken place, which is absolutely just destroying companies that are directly related to Cedar Fair, obviously being in the amusement park sector. And one of the reasons I was almost debating on buying the stock myself was the real estate that this company sits on. Realistically, if theme parks ever went down, if you know anything about the locations that these operate in, it is probably some of the most valuable real estate that currently exists. But unfortunately, I was involved in the entertainment industry, and as I told you guys, I don't like overexposing myself, so it was just something that could never make it onto my buy list. And I feel bad for him because obviously this is probably one of his worst performing stocks, being down 52% year to date, with a likelihood of not seeing a rebound for even another year, because we have to get on the other side of the pandemic. And then on top of that, guys, these companies are going to have to rebuild their balance sheets up. Taking a look at another one of his worst performer that I'm going to put in a basket of three stocks that I absolutely despise right now are obviously in the energy sector, being directly related to oil with Chevron. You got BP, and then of course we have Royal Dutch Shell. Now, these are companies to a major extent I do believe are undervalued, but unfortunately due to current sentiment based in the market, people will just not be buying into these. Even these companies, I believe, in the near term are going to start highly focusing on the natural energy sector, which is one of the primary reasons they're getting destroyed with companies like Tesla coming out. You have a lot of natural energy companies like Northland Power that are having fast growing balance sheets that are going to start replacing and adopting into the utility sector. So I just believe that these things are going to continue to be out of favor into the future moving forward. And the fact that you do not have control over these products, when we watched oil go into negative rates not even a few months ago for the first time in my lifetime that happened. It really shines a light on the political control of oil as a product, which bothers me immensely because I would rather own companies obviously that sell razors and toilet paper, because you know there's not going to be mass political manipulation moving forward at any time in the future. And especially when you have governments and countries, especially like up here in Canada, that are so heavily against the oil companies that they introduce something called carbon tax. They're actually taxing these companies for the extra carbon emissions they're emitting, in which we also have to pay that carbon tax when we fuel up our cars, leading people more down the electric vehicle path, which also causes more negative sentiment moving forward. So this is part of the economy that I will not be touching anytime soon. And yes, even though I do believe it's undervalued, I just can't foresee a reason that it would make a good and stable investment for a dividend investor looking to get to some form of early financial independence. Now, finally, his last worst performer, which also comes as a bit of a shock to me, which would be Wells Fargo. Now, I just did a quick preview of most of the bank earnings, and in fact, Wells Fargo just posted their earnings today. Now, people did not take these earnings too positively, with obviously the Federal Reserve cutting back on allowing banks to do dividend increases and share buybacks. There is a lot more negative sentiment around the banks. I just don't think they're going to be that hard off, even though we are heading into really low interest rates, which also manipulate the bank earnings. I just think if you could hold on to this into sometime in the near term future, looking at 1 to 3 years out, that these things are trading at a stupid discount, especially even with the Canadian counterparts, which many of you know I would rather own the Canadian banks. But nonetheless here, guys, I love these companies right now where they sit, and I think they're a much better buy than the oil sector and will likely have a much quicker rebound into the near term future. Now, these make up some of the worst performing stocks in his dividend portfolio. So now let's take a look at some of the best performing stocks, which are actually new investments to his portfolio, because if you've been a hardcore PPCIAN fan, you might be aware that he actually works in the industrial building sector, where I think he's responsible for building out factories for specific companies and warehouses, in which he only recently bought into these 2 new companies that IPO'd this year, one of them being Otis Worldwide, which I do believe operates in the elevators business, currently up 44% year to date. And taking a look at Carrier Global, which operates in the distributing and heating and ventilating systems for these warehouses, which also IPO'd in the spring of this year, being up a whopping 156% and also currently still paying out a 1% yield. These would have to be some of his top performers. Now, moving into some that aren't on his ride or die list that come as a shock to me, of course, being Apple, another one of his best performers. But again, just because I don't think he's getting a high enough yield off of it, not going to make his ride or die list. But one of my favorite stocks of all times is I've seen some pretty substantial gains, and something tells me PPCIAN, being a much more experienced dividend investor than I am, has been in this one for quite a bit longer than I have. Now, taking a look at the railway sector here, guys. Now, this sector has been one of the best performers for not only Warren Buffett and Bill Gates, but obviously on the Canadian side of the border, CN Rail has been one of the best performing Canadian stocks of all time. And this guy, going back to 2017, is trading up a whopping 211%, probably being one of the best dividend stocks that he owns. Now, moving along, taking a look at the air product and chemical space, this is another one that came as a bit of a shock to me because I don't understand this company at all. It's not one that I have looked too deeply into, but in the last 2 years, it's trading up a whopping 86%. It trades at roughly a high premium here with a 34 PE. I'm curious to why this chemical company, or what kind of products they have they're selling that are so staple that people are willing to put such a high valuation on it. And then finally, one of his last best performers, and obviously we could throw Clorox in here, Procter & Gamble, all incredibly performing stocks, but if we were to scale down the time frame, Walmart definitely fits up in there as one of his best performers in more recent times, which again I also find fascinating. Did not make his ride or die list, but nonetheless people love Walmart. I mean, Walmart has been allowing you to go into their parking lots and watch movies as they set up like portable movie theaters and projector screens. Really awesome stuff. Walmart's just been an incredible company, and this is one that I wish I added to my portfolio earlier on. But even still, where it sits today, being a $400 billion company, still trades at a relatively fair value with a PE right now of only 22. Now, finally, just taking a look at the sector that I find most interesting in his portfolio, one that he talks about being some of the first investments that he made. Of course, we're going to be talking about this SIN stock sector, being British American Tobacco and MO, which are 2 stocks that I hold, even though I do like his other holdings with PM. These are just sectors of the market that I think if you're new to the dividend community, these are ones that might be worth picking up because these companies have been staples to society, and MO has largely been considered one of the best dividend stocks of all time because if you were buying it even just a decade ago, with the dividend increases you would have experienced, you'd be getting pretty close to almost a 20% yield, which is just just absolutely staggering. And as much as people don't like the sin stock sector, which could also be compared on a negative sentiment standpoint compared to something like your Exxon Mobils and your BPs of the world, I just think these companies have more control over their products. Even though the government has been coming down on them, they're just much more diversified than just cigarettes. And the fact that nicotine products alone have been in our history just as long as gold has, I just can't foresee this being a bad investment, with currently paying out an 8% yield and BTI paying out a 9.6% yield, trading at a PE of 9.6, and MO not documenting a PE because they have been doing many write-downs. I can promise you their cash flows can afford these dividend yields. And if you just want stocks that are trading at absurd discounts with really high yields, this might be a part of the sector to start paying attention to. Now, overall, PPCIAN's experience in the dividend stock investing realm, I think, can offer some incredible insights to new investors. And like I said, guys, just taking a look at his portfolio, if you wanted to build a super robust income producing portfolio for your financial independence, just pay attention to the sectors that he most focuses on. Again, being the consumer staples in the food sector with things like Procter & Gamble as well, Pepsi, Coca-Cola, all of those stocks, super awesome. And then in the healthcare sector, making up 10% of his total portfolio. Now, I wouldn't 100% agree that sin stocks might be where you want to focus a large portion of your portfolio just due to the negative sentiment that might continue moving forward. But nonetheless, guys, still really awesome companies. And then finally, utilities being another one of the largest sectors that I think will offer the most stability if you're looking to get to a quicker financial retirement. Now, I would love to know what you think about these in the description below. What is your general opinion on PPCIAN's portfolio? The only thing that I think he's underrated on is basically future forward-looking companies that could either be in the natural energy sector or just general stocks that might offer more growth along with the dividend yield. But in all of this, guys, I hope you enjoyed this video. Stay cool, stay awesome, and I look forward to catching you tomorrow.